Good morning, Austin. This is Troy Schlicker, Reserve Realty, here with the Austin Spotlight. And today I am joined by Hall T. Martin of the Texas Entrepreneur Network. He is the founder and CEO. Welcome, Hall.
Thank you for having me, Troy. I'm glad to be here.
Appreciate it. It's a little challenging to sit in front of a computer right now. Like we just were talking about, the weather's so nice right now. It feels like a day you should be out golfing or hiking or doing something like that. But it is a Tuesday, so being in front of the computer is probably the right thing to do.
Absolutely. I'm actually enjoying a little bit of this Zoom-based work. No commuting, no parking. It has a lot of productivity and efficiencies that I like a lot.
Yeah, no, I mean it's been one of those. Obviously, the last year has been unprecedented for just about anyone who's alive, with kind of the pandemic from that standpoint. And so it's one of those where there's obviously a lot of things that have been frustrating about it. But to think that had this happened 10 years ago, 15 years ago, how much more challenging it would have been not to have some of the technology in place that we do to still see friends, family, loved ones, kind of face to face, as as close as we can get sometimes, and to be able to be as productive and stuff from that standpoint. And so, and I've always felt Austin's had a bit of an advantage because we are so tech based that we went from a lot of people that were maybe working remotely a day a week to then they just kind of went remotely 5 days a week. So I think we were maybe able to make that transition a little bit faster than others. But enough about that. So give us a little bit of your origin story. So are you a native Austinite, like so few people around here, or when did you kind of make the trek to Austin, if not?
So I came to Austin in 1984. I'd finished my undergraduate at Baylor in Waco, and I wanted to do a graduate work before I went into the work world. So signed up for the UT Austin MBA program, moved here in 84. And back then there was about 500,000 people in Austin. It was a college town. It was a government town. A little bit of technology was starting to poke up around the corners there, but got the MBA. And then after 2 years, I graduated and went to work for a company called National Instruments, which was in the early stages at that time. I think I was employee number 93 or whatever. And it was the proverbial started in a garage and grow it. And they had spent 10 years prior, doing different things. And then they had finally landed on standardized products, and they were hiring technical people to pick it up and run it. And so I joined and did some support work, and then became the European sales manager. So I spent about 10 years just flying back and forth between Austin and several places around Europe, setting up offices. And wasn't married then, so it was a lot of fun, time of my life, so to speak, and really enjoyed it. And long story short, I stayed there and for about 24 years. But in 1995, they actually went IPO'd, and I started doing angel investing after that. And so we had an angel network in Austin back in that time called the Capital Network. So I started going to their meetings and starting to invest in the deals. And they ran from about 95 to 2002. They got tied to the .com world, and when that went away, they went away with it. So I was doing angel investing with just some friends for a couple of years, and then in 2006, the chamber in town decided to do a restart of the angel community, and they called it the Central Texas Angel Network. And I was the first member to sign up for it. And the secret of angel investing is that when you're the first member to sign up for a group, you're automatically on the board in charge of membership, and it's a great honor. There's no pay, but it was a great honor. And then after a couple of months, we lost our director. So I became the director, and I ran it for the first 2 years. And we got about 50 members recruited and about $5 million invested in 20 deals. And one of the deals turned into a 40X home run. And so that propelled the group onward. And, so at that time, after about 2 years, got a call from my contacts at Baylor, who said, "Hey, we want an angel network out of our university here in Waco, out of the alumni organization." So I said, "Well, hey, I'll help you do that. I know how to put these together." So I joined the Baylor group and helped them put the program together at that point, and I'm still a member there today. And then Williamson County said they wanted an angel network, so I helped put that together. So I really enjoyed this angel thing. And along about 2009, I said, well, I'm having more fun doing this angel thing than the big company thing. that National Instruments was at that time. So I stepped out and I started what was called Texas Entrepreneurs Network. Originally, we called it Austin Entrepreneurs Network, and we did resource lists, and we helped the startup community find where everything was, and did many pitch sessions and coaching and so forth, because I enjoyed that part of it. But I renamed it to Texas Entrepreneurs Network because I wanted to do things around the state. And so we started putting together programs for Dallas, Houston, San Antonio, and we actually did funding forums all the way around the state, all the way out to El Paso for a while. I had this theory that for every 10,000 people in a city, there was one angel investor. So in a 100,000 person city, there are 10 angel investors. And sure enough, we went to Lubbock and there were 10 angel investors. So it was pretty much a way to get out to the second tier cities and do it. There was just one problem with that model we had. It's a big state and we were driving everywhere. And so we were burning up the road quite a bit trying to keep up with all of these things. So we decided to put everything online in the form of a funding portal. We called it the CTAN funding portal, and started doing deal flow online. And we had a Texas intrastate license. It was a precursor to the Title III crowdfunding that you see so much of today. And it was a lot of fun doing those things, but Title III and intrastate really appeals to consumer products. You have to have something consumer facing. So we did a whole bunch of breweries and a whole bunch of consumer packaged goods, and that was a lot of fun. But decided I really wanted to get more into the tech and healthcare and the other things that they don't come across so well on the platform. And so we hung up the platform and we did a relaunch, and we called it 10 Capital. And we went back to accredited investors. And I built a large network of angels and venture capital and family offices over the years. We had 12,000, and decided to relaunch and go after helping people raise funding. And we hung up the portal and found out that, we really don't need a portal. Everything, 95% of whatever happened in the email. And so we just moved our program inside the email and saved ourselves a lot of time and headache. And we started getting calls from outside of Texas around 2017. So we changed the name from Texas Entrepreneurs Network to 10 Capital, because we wanted to work in West Coast, East Coast, and anywhere in the U.S. And that's how we got to where we are today. So it's been a great ride, and Austin's been growing ever since. We have tremendous number of startups coming to us from Austin, and love working with the Austin community as well.
That's awesome. I think, kind of going back to the beginning of that story, I feel like a lot of people think of Dell as kind of the OG of the big tech companies in Austin, but National Instruments really was. It doesn't get some of the headlines and press, and there's probably a different true OG and stuff, but like National Instruments has been kind of driving a lot of that tech stuff here in Austin for a long time. So that's awesome that's where you got your start along with them from that standpoint. How have you enjoyed kind of growing that from, again, that local base to now national from that standpoint? Has that created any additional challenges? Or, I mean, obviously there's going to be some challenges and stuff with it, but like, is it mostly positive things from that standpoint, or?
It's been a positive thing. One thing about startup communities is you really start to learn how they work and how to work with entrepreneurs and how to gather investors together, how to form capital, how to run campaigns. And so I spent 10 years basically doing that, mostly in Austin, and learned a great deal about that process of fundraising, and decided to focus on that aspect of it. I'd done the tech side of things before. Now I wanted to do more of the financial side of things. And so I came at it from the approach of helping raise funding, angel centric, but, venture capital and family office and other investing tools are not too far away from it, with the idea of really helping grow the entrepreneur ecosystem. And we saw the Austin system grow quite a bit. When I started in 2006, there was maybe 2 or 3 incubators in town. There were no co-working spaces. A couple of years later, co-working spaces started to come into it. And today there's many co-working spaces and incubators and programs that are available, that we decided, well, we don't have to do that anymore. We can work on higher level things. And the number one concern I heard was fundraising. How do I raise money? Because you have to convince people to put money into a startup that may or may not succeed. And that's probably a seed stage startup. Fundraise is one of the most challenging things you'll ever do, because you have to convince people to have a leap of faith in you and go forward. today the stock market's at an all-time high, a lot of money swimming around, but there are many times in the last 20 years where it was not so. And so it was much harder to start and run a business itself. But I learned a great deal about, the startup ecosystem and how you make those things work. And along about 2017, I think it's 2015, I wrote a story for the Austin Business Journal called The 12 Tribes of the Austin Entrepreneur Ecosystem. And I identified where the major groups were, and the university turned out to be the core of it. And it was the unsung hero of the ecosystem, because they were turning out all of these startups and all of these students that wanted to run startups, that it made a great sense. They had a great accelerator program and a great incubator program, and they did a lot for the community that really anchored it. It was the granddaddy. But there was many other groups in consumer packaged goods and gaming and film industries and tech and so forth. And, Seth Godin once said, entrepreneur ecosystems are tribal in nature. And I really saw that, and always wondered about how we could foster those tribes and then maybe cross-pollinate those tribes to do unique and interesting things.
How challenging is it going in between different industry segments? Right, you talk about consumer goods versus, say, tech versus healthcare when in trying to do that, because while there's some obviously financial overlap and stuff between those, really understanding the core businesses and what's going to make, again, a consumer goods product successful versus healthcare tech company successful, I would imagine would be quite different.
Yeah, those markets are very different. The funding needs are very different. And that's one thing I always wondered about, and came to learn, is that when you say startup or entrepreneurs, you say I'm working on that. I always ask that next question, okay, what kind of startup? Because I actually ran a class once where I gathered 8 companies together and gave them a class over 8 weeks. And they were from all different walks of life. There were at-home businesses, they were women-led businesses, they were film projects, it was a complete mixture. And what I found is that for every type of startup, you need a certain kind of networking. How do you find people to work with you? Mentorship, who can coach you, and funding. And if you ever want to do a startup class, that's not the way to do it. You want to have everybody be in the same category, because the networking, mentoring, and funding are unique to each type of group. And so that's why cross-pollination can be a little tough, because you're crossing models there, you're crossing networking, and you're crossing mentorship. And a lot of that was what we were trying to do with the early stages of Texas Entrepreneurs Network, was provide those mentorship opportunities and funding forums. We did funding forums on film. We did funding forums on gaming. We actually ended up doing an accelerator called incubation station, now called SKU, on consumer product goods. Sherry Wynn Ressler came to me and said, hey, I want to do something for the startups ecosystem. And we looked around, and the tech things seemed to be pretty well covered. But what I remember from my CTAN days is everybody that walked in the door said, I'm a tech investor. But at the end of the year, half of them were really consumer product good investors. And so that seemed like a growing space. And that turned out to be a good thing, because there's a growing market for new brands and the millennials coming up wanting their own new products. And so it was a seismic shift in the market that we're taking advantage of. But again, a consumer product good needs a very different kind of mentorship than, say, a tech startup does.
Yeah. You mentioned obviously growing early on too. You were growing, El Paso, different places from that standpoint. Talking about like accredited investors, and accredited investor is a nice fancy word, but that doesn't necessarily always mean the most educated of investors from that standpoint. It's obviously, there's a degree of having the money that the SEC feels like you're capable of losing to some degree from that standpoint. And so how challenging is that to like bring in accredited investors and are you having to teach and coach them up too? Or is that usually kind of, hey, I trust you, you have this track record, we trust you in your ecosystem, and they're willing to be more hands-off? Or what kind of balance is that from an investor standpoint?
Well, that's one thing I learned with the angel world, is that every cohort of investors who come in as angels, they seem to just start all over again from the get-go, learn all the mistakes and do all the same things. And the people that had, invested for the previous 5-7 years and had the experience, they had usually exited the field to do something else, retire or what have you. And so that's one reason why I started my podcast called Investor Connect, was to try to capture the institutional knowledge of what the investors were doing, to share that with future investors. Because I asked one of the angel group leaders once, what would you have done differently? I was trying to figure out how to plan for CTAN. And they said, I wish I had put more tools in place for institutional memory. And it came up a lot because they wanted to capture the knowledge from one group to share it to the next, because everybody would start over from scratch, learn the basic mistakes, spend 3 years, and you lose X amount of money before you start to realize what works and what doesn't. So that's a common problem among any investment group, is how do you carry over the knowledge from one group to the next to going forward?
Yeah, kind of the saying of what got you to where you are won't get you to where you want to be kind of situation. And so if you don't have that knowledge or the resources, again, like I feel like in my job, one of the biggest things just is knowing who the resources are to get the right answers versus trying to know all the right answers, because I don't think that's very feasible in most industries and stuff. And so being able to rely on those experts that way too. You mentioned you're still leading the Waco, the investment or the angel group for the University of Waco, if I'm correct.
Yeah, in Waco, the university, Baylor University has an angel network. We have 65 members now. I'm a member there. I helped put together the original program for putting it together. And the thing I learned there, and I actually tried this in Austin once. When I started CTAN, I went to the Alumni Association of UT and said, hey, do you guys want to put an angel network together? Because Stanford had one, Harvard had one, and I thought, this would be a great thing. But I made a couple of mistakes. Number one is I walked into the alumni organization by myself. And what you should do is walk in with a business school professor that is going to sponsor you and say, we're going to keep these guys on the straight and narrow. The second mistake I said is, we're going to make you money. I can tell you that gives you nowhere at university. And so after that experience, when it came time for the Baylor one, I realized, well, number one, you need to have a business school professor with a solid gold reputation that will come in and say, I'm going to take care of these guys and watch over them. I'm going to keep them on the straight and narrow. Last thing the university wants is a bunch of alumni running around trying to do things with students that is not part of the curriculum or the program or the university. So you have to have that. And number two is you need 5 check writing angels that are in the alumni group saying, hey, we're going to write these checks with or without you. We want to do this. And at that point, you now have the elements for building a university-based angel group. And A&M has one now, and there's, I think, over 200 angel groups that are based out of universities, because there's a strong affinity between the investor and their university. And not all the deals have to come out of the university. At the Baylor one, it turns out that it's primarily an educational experience for the finance majors. They get great jobs that come with it afterwards. And that's the magic you want to use when you go to a university, is we're here to help provide a better student experience and better job placement. And money's a distant second. We'll do that later. And one thing I found is that, if you have to think about the why of your angel group. And if the why is going to be, we're just here to make money, well, then people come in, they have 3 75K checks. Okay, bang, bang, bang. Now what? Well, we'll wait to see what we get back. Well, that's going to take 5 to 7 years. And so, it's hard to keep people staying in the program a long time. But at the Baylor Group, it was about, we're here to provide a better educational experience for students and give back to the university. We would like to make some money. We would like to give some of the profits to the universities itself. But and so the turnover rate is much, much less in that case. People stay around years, if not decades, in those programs because the why is so much more compelling and powerful.
Sure. Yeah, no, I mean, similar to how the sports teams, right, are huge draws and stuff. Just people have strong affinities to the colleges they went to in a lot of cases. And so they can delay, again, in a lot of cases, they're probably delaying the time frame of making money and how much money they would have to make on an investment versus in the private sector, wanting to, make, X profit, X ROI on their return. Do you feel that, so one of the interesting things that I see happening is, and this has been going on for a while, but like, right, schools, while there obviously still a lot of benefits for people going to college and going, especially depending on the types of careers they want to, so many entrepreneurs and startups will a lot of times end up leaving school, not go to college, going, their startups in a completely different field than the degree that they got into. Do you feel like that in having that connection with the school that you're able to kind of provide not a better, because it's not that school is a bad educational experience, but enhance that and bring more real life education to some of the students from that standpoint versus the textbook education that they're getting in a lot of cases otherwise?
Sure. And, one thing we saw at Baylor is that, the finance majors were picked to get internships and classes, got course credit for actually analyzing the deals that were coming into the Angel group. They do 20, 25 hours worth of analysis on a deal all the way through the cap table, doing diligence and so forth. And having real world experience and having that in their portfolio really sets you apart from most other finance grads when you go out there. And you can also do that with entrepreneurship. Take entrepreneurship students, have them come and do more of an operational analysis. And there's no better education than to look at successful startups to figure out how they organize the business model, how they position themselves and so forth, how they operate the business. If you are planning to start your own business shortly thereafter the university. When I was in graduate school, 95% of the people went to work for a big company afterwards. So a lot of the programs were geared toward that. Along come, 2000, 2005, 10, that world changed quite a bit, where your first job was more likely going to be with a startup than it was with a big company, given the way things were. And so having worked or having analyzed a startup, you would probably have a better understanding of what the dynamics were, a little bit about the other elements of the business, marketing, sales, production, and so forth. So certainly it's a great educational opportunity.
What have you seen over the last year with COVID, the shutdowns, a lot of the acceleration of e-commerce, acceleration of, again, I think the acceleration of people coming to Austin, right? Like Austin was always growing, but it accelerated a lot with the pandemic and people being able to work remotely. So you could be working in California, but living in Austin. What have you seen on the angel side or investor side, that startup side, that has been affected over the last year?
Well, we've always known that Austin was a lower cost place to work and maybe a higher take home pay with, salary versus cost of living. And so there was always a stream of people coming from the Bay Area, some from New York to Austin. And it, of course, accelerated rapidly because you don't have to be there as it used to be. They used to have a 3-hour flight rule. I have to invest in somebody that's within 3 hours of my home, and some had the 2-hour rule. And Austin seemed to be a little bit outside that window for the Bay Area. But when the world went online, that now it's a 3-minute rule. I need to be able to get in touch within 3 minutes on Zoom. And that's now the accepted standard. And I think that is the standard going forward, is people are going to want to have a Zoom call with you first because of the efficiency. There's no driving, there's no parking, there's none of that. What used to be hour meetings I had at the Starbucks for many a startup is now a half-hour Zoom call. And you switch from one to the next. And I don't see anybody giving up that productivity increase because I'm really not missing a whole lot, even though people talk about reading the body language and so forth. I'm not sure that's going to go back. Later in the process of fundraising, you'll probably meet people face to face. But up front, I think this is going to be the way it carries on because it's just so much more efficient.
Sure. Yeah. Like when you meet face to face, I mean, meetings in general, especially on the corporate side of the things, tend to be longer than they need to be, right? There's a lot of wasted time in that. And so but even I'm sure with startups and you're meeting someone that way, if you've spent the time to fly to San Francisco, or someone from San Francisco's taking the time to fly here, you feel like that meeting's has to almost last a minimum amount of time for the investment and time you spent in to kind of get that meeting to happen. Where when it's a Zoom meeting, it can, because it's so low friction, it can be much quicker and say, hey, let's meet once a week over the next 3 weeks for 10 minutes instead of, hey, let's have one big meeting where we really aren't any more productive from that standpoint.
Absolutely. Yeah, I think business travel is probably going to get cut or pared way back because you really don't need a lot of that. You can do a lot more. And I see people in these half-hour Zoom calls being a lot more thoughtful about their time management and what they say and contribute because we got to fit it into a half-hour time slot. And I think that does work as well. Online collaboration tools work better. Angel groups had to go online as well. That's one benefit I see is I can access almost any angel network now through online, whereas in the past I had to get on a plane and fly there for their physical meeting. The other benefit I see is that in an angel room, if you're in the room physically, it's just bad mojo to take out your phone and start, typing on it because people think you're checking email when I was always trying to do competitive research or analysis on the deal.
Mm-hmm.
Let's look them up on Crunchbase. Let's see more about them when they're pitching, but you're really not allowed to do that. When you're in a Zoom call, all your tools, all your online tools are now available to you. You can be looking at comparable values and be looking at competitors. You can be doing some research on their history and so forth, or looking at their diligence box while they're pitching and start to figure out, is this a good deal and so forth. So I think there's a real productivity advantage that comes when you're looking at deals online because of the additional information you get from it as well.
And potentially in that scenario, you can actually ask more insightful questions in the meeting because you've gotten additional information there versus being like, oh, well, now I got to go back and do my research. Not that you won't do more research later, but hey, now I got to go do my research and here's all the questions that I had based on my research after our initial meeting and stuff that way.
That's right. Yeah. And, during the pandemic, anything that was online, greatly accelerated. The Title III crowdfunding went up by 50%, and they just raised the rate from the limit from $1 million to $5 million. And so Title III crowdfunding used to be the stage before angel investing. Today, I'd say it's a stage that runs parallel to angel investing. It goes on top of it. Many of the deals that we have coming through our program, sometimes they say, I've got a crowdfunding campaign, investors will just need to punch money into that. Others will say, I'm going to run a parallel Reg D offering. And so you start to see that the Title III has really grown up, and it's because it's all online. And it does have scale too, because it's, the average investment's at $500. People are asking you to invest $500 off your credit card into a deal. So that's more of a transactional thing. With angel investing, it's $50K, and you're looking around the room to see where you're going to put the $50K. And so it's a much more thoughtful question to consider.
Sure. Obviously, in the news, the big thing is for Austin. One of the big things has been a lot of the larger companies moving to Austin. So the Teslas, obviously, Apple was already expanding their network here up in the Northwest, and Oracle decided to move here and stuff too. How will those large Fortune 500 companies kind of moving to Austin? How do you think that will affect the startup and angel world here in Austin, or here locally?
Well, that's where you get a lot of angel investors or people that worked at big companies and then they've retired and they want to give back to the community, or they want to invest in early stage companies because they have a passion for the space, the technology, or the team. And so, all these companies coming in, the Facebooks, Googles, and all these other people are basically bringing, soon to be minted angel investors. At some point, they're going to say, this is enough. I don't need to do this anymore. I want to do something else. And they always want to try angel investing for at least a 3-year cycle. So you'll see a lot more angel investors coming in. You saw that in the 90s with Dell. When Dell came up and went public, it minted a lot of angel investors. And there were several groups that popped up for a period of time that did angel investing in either as a group or both formally and informally in the community. And that's one thing that really propelled Austin in the 2000s was the Dell Angels that came out of that.
So yeah, and the Dellionaires, as they were called back in the day, from that standpoint. So that was before my time here, but even that folklore has carried on from that standpoint.
It was a great time, I tell you. It was heady all the way around, and you had your big company, and that got you a lot of spotlight. And having the Teslas and the SpaceXs and all these other groups coming to town will put Austin in the spotlight many more times. And I think we'll see that feeds on itself. It attracts more people and more people come in. But again, you still have the anchor elements that are there. You have the tech community, or you have the university providing technical developers that come out of it. There are many cities that really have a hard time supporting an ecosystem because they just don't have enough developers. And so it's hard to keep people going here as well. But when you bring all these big companies, Google and Facebook, they bring a lot of developers here that can be very helpful to supporting that startup ecosystem as well.
So obviously with the, everyone working remotely and stuff these days, it's kind of put a bit of it, lowered the burden on our infrastructure, both from a road standpoint, but we're seeing a lot of that potentially starting to increase back up with more people. Home prices are going back up. Do you see any roadblocks or things that may hinder some of the growth from that standpoint? I mean, again, obviously, cost of living here in Austin is still dramatically lower than almost anywhere in Silicon Valley and San Francisco and those kind of places, and even travel-wise. The people that I get to see that are relocating to Austin are still like, oh, that's only a 45-minute commute. That's nothing. That's awesome. That's great. So it's definitely like a lot of things in life. It's all about your perspective on how things are from that standpoint. But do you see those things potentially hindering some growth down the road at all?
Well, I used to think that the hindrance or the limit, back in the 80s, the hindrance was the lack of a major airport. Fortunately, the local Air Force base, Bergstrom, shut down and they turned the runways over to the city, and who had spent literally 12 years arguing about where to put the new airport. And when that became clear, well, then, okay, now we can move forward with it. Then it became the roads. Up until recently, there was no true ring road around Austin. We had to rebuild that with toll roads in the last 5-7 years, but roads were a major issue. And of course, if you had to work downtown or wherever, you had to get in your car and drive there and go through all the issues. So, but now that we can work remote and we don't need to put so much pressure on travel like we used to for business purposes, I think the real issue now is housing. Will you have enough housing to go forward? One of the lessons from the Bay Area is someone once said, Bay Area should have, as many people as Hong Kong does, which is Hong Kong has 7 million people. Bay Area has 1 million because back in the 80s, a small group of people passed a proposition that limited the amount of housing that could be built to prop up their price. And we all see where that leads. And so that's the thing to watch out for, is you need to be able to have housing to support a growing population to carry forward. There are some environmental concerns that Austin puts in that other Texas cities don't. I'm amazed with Dallas, where I grew up. Boy, they can put up a subdivision and a set of roads almost instantaneously. And if you have you're in a growth spurt, you really appreciate that. So I do worry about the housing. Will we be able to keep up with it? Because I think that's one of the critical factors that makes or breaks the city long term.
Yeah, like it's definitely a concern. I mean, I think it's one of those things where we still do have a lot of runway to work with, and so hopefully both the developers and city leaders and different things can work those types of things out effectively. A small technology thing that is of growing interest to me, but I'm very not knowledgeable in it, so I figured to see, kind of get your take. And if this isn't part of your world, that's fine too. But NFTs. So in learning more about blockchain and all this stuff that is kind of the future of the internet and security and verification of, everything from eventually it'll probably be your house title transaction and stuff. What's kind of your thoughts on the smart contracts and NFTs and stuff? Obviously, if people are following NFTs right now, are getting a lot of pub for being digital art that's making a lot of money at a Christie's sale and stuff like that. But there's a lot of potential for the smart contracts and some of those kind of things to have real business impacts down the road. Just kind of interested to hear your thoughts on something like that as I try to educate myself on some of those things.
Well, I think the age we're in is the digitization of everything. I mean, everything is going to go online, and if you need a IoT device to get information online, so be it. But fundamentally, everything is going to be online, including your mortgage and your payments and your baseball trading cards. Everything is going to have an online representation to it, and there's a lot of advantages to that. In the 2017 ICO token white paper extravaganza we went through, we had quite a few of those we popped up. The concept was really great. We're going to create this thing called a token that lets us do additional things that a dollar doesn't really do well. If you start putting dollars on things, you get into taxes and you get into other things that make it difficult. And if you can create this alternative value system, you can do so many more things with it. And so non-fungible tokens is one example of that, where you're actually creating a token representation of that physical object out there that you can trade, or you can use to verify that your artwork is really genuine and not a forgery. And so there's a lot of things that are going to be great things for us. So I just see it as the next generation of enterprise software. And Austin has a long history of enterprise software, which is why you see a lot of blockchain companies popping up here and providing solutions in this direction, because there's going to be a whole new world coming up very soon that is going to be driven by, NFT-like technology. And I think smart contracts make sense. You put it online and have it run automatically. We all love recurring revenue SaaS businesses because of the predictability of the revenue, but nothing beats a smart contract where it's online and it actually makes the decisions for you. You don't even have to go and collect anymore. It's going to use smart contracts to collect for you, and that's going to be the next generation. So it's just the next generation of all the things that we appreciate already. And the world is now moving online because they see from the pandemic that you can't bank on or count on physical people being there, and those are not always the best jobs anyway. And so we're going to move to the next generation with it. And we hear these eye-popping numbers of how much people spend on non-fungible tokens. Realize they're really not taking cash out of their IRA to go do that. They're just putting in Ethereum or Bitcoin or whatever they have for that, and that's an outlier. Those are probably not realistic prices that you'll see in the market. The market will settle out at more competitive and realistic prices down the road. But look at the underlying opportunity of what you can do now with those tools. That gives us a whole new set of careabouts that we can go work on.
Yeah, one of the people that I follow, kind of the thought standpoint, is the fact that it's a little bit like probably 1998 internet, where there's all this excitement and it really is the way of the future, but there's also a lot of projects happening like there were in 98 that really aren't going to be long term and aren't going to necessarily keep their value. But just because, again, some of these NFT projects go to zero because they don't really have any value, doesn't mean that the underlying technology and the concepts and stuff aren't valid and won't kind of persist and work their way into the system.
Yeah, people get ahead of themselves. If you remember back in the 90s when Amazon came out, remember what their first slogan was? We sell books online. Okay. Yeah. That's a far cry from where they are today, but realize back in the 90s, the infrastructure wasn't there. You didn't have payment systems, you didn't have security, you didn't have a whole bunch of things. About all you can do is sell a book online, and that's what the infrastructure can do. And in 2017, I thought we saw a glimpse of that 99 euphoria, because the blockchain is here and Bitcoin is here, everything's here right now. But again, the infrastructure is not there. All you can do is very simple things at this point, and those technologies will mature. I remember once 2019, Mark Andreessen quoted, "Everything we tried to do in 1999 can now be done today, 20 years later." And so the lesson is that infrastructure takes a long time to build out. So you have to start with simple things and work up to the bigger things. And those promising the very biggest things up front, they're going to have a hard time delivering because the tools are not going to be there. And we just learned that lesson over and over again. So, you have to take, technology is driven by hype, and it's always massively oversold up front. But later it will catch up. It just takes 20 years to get there.
Yeah, which in reality is a short amount of time, quite frankly. Like
In the bigger picture, it is, yeah.
I mean, again, to think that you and I are on a video chat that's on this Facebook and places where 20 years ago, I don't know that I even had a cell phone, let alone all those kind of things. And so, like, to just pretty amazing that way. So I know one of the things you had mentioned is that you have your own podcast where you get a chance to interview other knowledgeable people in kind of the tech and angel space and stuff like that too. Why don't you give us a little bit of information about that? I believe it's the Investor Connect here.
That's right. And so, like I said, I was trying to interview investors on what they invested in and how they made decisions and so forth. And we've done over 500 podcasts since we started, and we hit 500 about a month ago. And so those are basically introduction interviews, 20, 25 minutes of interviewing an investor on what they do. And then we do sector reviews. Mostly startups come in and they tell us about the sector they're in, because investors love to be educated about these sectors. They love to figure out how many companies are in there, the growth rates, what the careabouts are, and we have companies help us with that. And then we have what's called investor perspectives, which are compilation shows. We'll interview 5-10 people on a topic like blockchain or cannabis and try to figure out what the trends are these days, and then convert that into a series of shows, and then later come out with a guide that captures the essence of those shows. And then the last one is what's called the Startup Funding Espresso, where in the time it takes to drink an espresso, you can learn something about startup funding and investing. And so these are 1 to 2 minute podcasts that they also come out by email, but you can also listen to them, that describe some topic that is related to startup funding. And so if you listen to one a day, you'll learn a lot about the startup funding and investing world, which we get a lot of. A lot of people want to know. And we've done about 400 of those so far, and we'll hit 1,000 probably by the end of next year as well. So we can keep those rolling as well. And that's evergreen content. It's always rolling. It never stops because the basic concepts are always the same. So love to have you at investorconnect.org and subscribe to the podcast and learn about us. There's a pop-up window if you want to get on the Startup Funding Espresso daily to just listen to it right there. You can as well. So that's how we do our podcast these days, and love to have you on at some point as well.
Yeah, that'd be a lot of fun for sure. The other site for is 10capital.group for the Entrepreneur Network from that standpoint. And then for the best kind of place to not necessarily reach out to you, but you'd mentioned kind of LinkedIn is kind of where you're most active.
Yeah, I got about 24,000 followers on LinkedIn or connections, and have been curating that for a long time. So love to connect with anybody on LinkedIn. Just mention the podcast and be glad to connect with you and kick up a dialogue as well. Angels, I think they fit very well the LinkedIn world. Some do Twitter, some do Facebook, but almost everybody does LinkedIn. So just found that was one of the best places to connect with the funding world was on LinkedIn as well, and continues to be so for sure.
And like you mentioned, it's also a great place for those soon-to-be angels who are, currently active in their current corporate, company 500 level jobs that are going to eventually be angels in a few years.
That's right. Yeah, they're coming up. People that are growing in their career and leveling up every 3 to 5 years at some point get to a place where they want to do angel investing. When I was in high school, my father started me on investing, and we were looking at mutual funds. And then when I got into college, we started looking at sector funds. And then when we got out of college and graduate school, we started looking at individual stocks. And if you just work your way up, you eventually get to angel investing as an alternative investment vehicle. Gold trading and all these other things are there as well, but angel investing is one of them as well. And so eventually people come to that over a period of time.
Nice. Very nice. Well, I appreciate you taking the time to sit down and chat today. It was great having you on and getting to learn a little bit more about the Texas Entrepreneur Network and yourself as well too. Because again, I find that to me is one of the interesting things, especially as a realtor, is kind of understanding the people behind the different companies. And I'm assuming as an angel investor, that's a big thing for you too. Is like aren't a whole lot of truly brand new ideas out there, but a lot of times it's the people behind the companies and what they are able to accomplish and what their goals are that probably make and break a lot of those companies out there.
It always comes down to the team in the end, so you always look at the team as well. But appreciate you having me on. It's been great, and enjoy the follow-up.
Appreciate it. Everyone have a great day.